turn our attention to looking at the equities market now. So take a look at the week-on-week review. The NGX All-Share Index appreciated by 0.55% and market capitalization went up as well by 0.54 to close last week at a high record of 46,205.05 point and 24.89 trillion naira in terms of market capitalization. A turnover or total turnover of 1.44 billion shares worth about 19.08 billion naira in about 22,000 deals was traded last week by investors on the floor of the exchange, in contrast to a total of 1.8 billion shares valued at 47.4 billion naira that exchanged hands the previous week in about 20,000 deals. The top three sectors include financial service industry by volume, led activities chart with about 793.12 million shares. And if you look at the amount is contributing about 54.77% and 42.72% to the total equity turnover volume and value respectively. But if you look at the ICT industry, trailing behind the financial sector in second place with about 215.5 million shares, worth about 3.7 billion in about 1,000 deals. Coming in third place was the conglomerate industry with a total turnover of 98.2 million shares, worth about 190.2 million naira in about 88 or 889 deals. Well, trading in the top equities is Guarantee Trust Holding Company PLC, Cartway Business Solutions PLC, and Charms PLC in terms of volume, which accounted for about 308.07 million shares, worth about 2.8 billion in about 2,000 deals, contributing 21.27 and 15.05 to the total equity turnover and volume and value respectively. Well, if you look at the top five gainers for last week, in terms of review, the ETI, that's EcoBank Transactional Incorporated. You look at the Academy, you look at Courtville, International Breweries and Guinness were all among the top five gainers. And the top five decliners respectively include CIN and iLeasing, you have University Press, you have Prestige Assurance and Linkage Assurance, while Dangote Cement as well lost about 24 naira, 30 kobo. That's about 8.53% as at last week. But if you look at the earnings that are also coming into the market, those are also other areas we're going to look at. Let's call in Ambrose now. Mr. Ambrose Omodian is a Chief Research Officer, Investigator Consulting Limited. He joins us via the telephone now. Thank you for taking out your time to join us here this morning. If you look at the market last week, the market did about 0.55% week on week. And of course, the trend we're seeing lately with the coupled with the earnings in the market as well, a lot of people attributed the current trend to the fact that one, earnings are coming into the market, and then profit taking is also happening at the same time. How do you react?
Yeah, actually, if you look at the market performance from the 4th unit of the month of January to last Friday, we saw that the market has been on a bullish trend. But for last week, actually, we saw a bullish trend, and attributed to, as we just mentioned, to profit taking, and that's slowed down the market. After the market has traded above 54,905.16, it tells that the market is almost touching 47,000 before it pulled back. And it was a result of profit taking activities from one of the big cap stock, Dangote Cement, and we understand what it means when people are falling off to take profit to put out the market. But the good that the market is close profit for the week or that. But yet today, the market is also looking at almost 9 to 9.something% to close the month, knowing that today is the last day, trading day for the month of January. And I will tell you that the good thing in our market that for the past 3 years now, we have seen that January has been an uptrend. But the good thing that for this year especially, we have seen a straight uptrend in the month of January. That also come January in terms of selling, we didn't see that, but rather we saw a positive sentiment that caused this result that just went to the market. And the good thing that the result that just came to the market expensive. It gives an insight what investors should expect at the end of the year, at the end of the end of third quarter. Because this was that is between now and 31st of March, we expect their result to come again, or the third one that will come and dividend. But as from February, we are entering now. This February, we expect that they are going to use with the corporate action to start hitting the market. But again, now, I should just let the investor know that if you check the pattern of the market for the past 5 years, February has not been a favorable market. But because of this anything that we are seeing that new market expectation, I see that there might be a reversal in this year February market. Now, considering that the last FTC meeting, rebate was retained, and also during the last common market option for TB, there also rate decline. On that note, you might see more funds flowing into equity street. Now there are key numbers from these quoted companies that are getting expectation, indicating that they are likely to be a higher dividend payout for 2021, because the numbers we are seeing, I'm telling you, for the last almost 3 years, almost the number, that means the market, the corporate portion of the year, they are coming up from their COVID-19 slow down. Because the numbers we are seeing, I'm telling you, it's a bit my imagination, because most companies are putting numbers, especially from Presco, posted the positive number of almost 100% top line and 300% no profitability level. It tells that these companies are also integrated. You need also fixing. Fixing posted the positive number. As mentioned earlier, the result was positive. This gives an investment that we need to look at and we need to just talk about just beginning.
Let's quickly look at, yes.
Don't forget that in February, because of this market rising, I expect those holding the deficit begin to come also with February. But now we start seeing those companies that we want corporate action, especially companies like Yoka, Gillette Bank, Access, Diamond Cement, companies in February to use their committed accounts with corporate action. It's also going to change the face of the market. Like I said, February 2022, but the difference of other people who are saying in the previous 3 years, because other people in the end have started February has been red, but this year, I don't think that is because we are seeing a better number that this market expectation that we are trying more fun. So that as we are seeing that the price dividend will come, those companies will go that dividend for this period, that will support the market going up into the new month of February.
Well, of course, today is the last trading day. Before we get to that, you giving us what your outlook for and what the market is likely to close the month of January with. I want us to look at some of the earnings we're having that are trickling into the market. But the one I want us to focus is the Unilever Nigeria, the fourth quarter financials. Unaudited result shows that the company makes about 52.21 billion, and it means that it went up by 35.03%. So if you look at the profit after tax, which is about 3.48 billion according to the company, the gross profit is around 19.97 trillion. But this is where I'm going. Well, if you look at the expensive, the brand and marketing expenses, that's around 818.05%. So the question will be that how did this company was able to post this kind of result, and where did they make their money from? If you look at the fact that the marketing expenses went up in the year under review by about 118.05%. How do you react?
Okay, if you look at when it comes to this manufacturing company, in this economy now, they are already at a tight corner. But going to see a company that is growing their top line, it means that that company is eating through another market or it's expanding. And for you to expand, it is called that you to expand your seed. If you want to make more money, you can say spend more money. If you want to generate more seed, you must spend more money to want to drive your seed. And the good thing is that at their top line, they are entering new market, they are pretending like they have to grow their top line above 20%, which is a good one. And so looking at their bottom line, also in that direction, because for their earnings per share to move from 8 kobo to about 8 kobo, it is that they have done tremendous in terms of their bottom line. As an investor, your concern is at the end of the day, what is the profit after tax? Yes, the company has grown its cost of sales, and put it is not again, because if you have improved your top line, you need to spend more money to drive that sales. But what matters to you and I as an investor that you want to see the bottom line of this company, which is the profit after tax, according to the level. You
Let's wrap up with this, Mr. Modion. The oil share index is already doing about almost about 9% already since the beginning of the year. How is the market likely to close today? Today marks the end of the trading for January.
Yeah, for me, on the side of the numbers released so far, I see the month of even closing above what we have seen the previous 2 years. Because the previous year we had about 5% gain in January, the other one 8%. But for this one, I'd like to see either 9% gain in this year January, which is good. But on the strength of the numbers released so far, I think we're going to release today. Because today is the last day for those people that release all of these accounts ended 31st December. Today they are not, if it comes and this number also going in line with what we have said before, I think the market is close positive. You can see this morning, market reacting to Facebook better earnings or improved numbers or fantastic number has. The